What's up, guys? I wanted to make a quick video about some things that people have been asking me lately. One is real estate investment. So a lot of people are like, hey, real estate is really high. We can't really get involved. We don't have the down payment. We don't have the way to get a loan for these amounts, that the houses are way too high to get into investments. And so they've been asking me, well, what are some of the things that you're looking for currently? That, they watched that video about me buying the apartment complex for student housing, and they've been, hey, why did you buy now? What were you looking for when you bought that? How did that make sense at this, current economic standing with the housing market? And so what I kind of want to go over is what I look for when I'm buying an investment. Now, first of all, and I'll write it down here so you can see, is I look for something that the value is under market value, for one. So with the place I just bought, market value on it was about 1.35. They listed it at 1.2 under that market value, and I picked it up at 1.1. So it was well under market value. I was able to pick up with having equity instantly of about $200,000, $250,000 in equity. Also, then I look at investment-wise. What am I getting into investment-wise? So is it going to make a certain percentage back? So that percentage usually is 1% monthly on my initial investment. So if I bought something for $100,000, that's going to rent out monthly at around $1,000. Okay. So on the, again, we'll just keep referencing the apartment complex. On that, we paid 1.1 million for it. When it's fully rented, which right now it's not. Right now we're at 22 rooms, and I think we have 15 rooms full. So we still have a few rooms left, but at full capacity, we're going to be about $14,000 a month in rent, which is well over that 1.1. We needed $11,000 in rent to justify that, right? And right now we're just right around 10,000. So we're getting there, but we're not quite there yet. But I anticipate starting the new year, we'll be there with students coming into school and stuff like that. But so that's the type of investment we're looking for. So if you're going to be buying something right now in a single family home, yeah, it might not make sense unless you need to dump some money for. We're getting close to the end of the year for tax purposes. If you need to buy something on a 1031 exchange or to dump some money into an investment to collect some write-offs, that's a different point of view there. But if you're buying it solely as an investment, everybody's like, well, I've got a couple $100,000 just sitting in the bank waiting to invest it into real estate, but do I get into something right now? So if you're looking at a house, the average house right now where I live in Utah is between $350,000 and $400,000. That's a single family home. That's going to rent for $2,000 to $2,500 a month. So are you there at that 1% on a month in rent towards what you paid in the initial investment? No. You're going to be more at like 0.6, 0.55, something like that. And so for me personally, I don't invest in that kind of stuff right now. I'm not buying personal family homes. I'm looking for multi-level or multi-rental units, duplexes, fourplexes. This place that I just bought as an apartment complex, I'm looking for things like that to get into. Now, something else somebody asked me was, would I be willing to start a REIT investment? Well, a REIT is basically a real estate investment that you're getting into. You put in a certain amount of money and they guarantee you a certain percentage on that money. You would own a portion of whatever they're buying, and that return, they're going to give you a solid, usually it's 6% annually. So let's say you have $100,000 you want to invest, but you can't find a property, right? You can't find anything that's selling as low as $100,000. And if you are, it's not going to bring you in the revenue you were hoping. So again, we're looking for that 1%, which would be 12% annually. So if you can't find that, then people will say, hey, well, I will just go with a REIT. And with that REIT, I'll invest my $100,000 in. They'll give me 6% annually on that. Whether they make 6% or not, they're guaranteeing me that 6%. Plus, I own in the property, so I have something tangible, physical that I own versus a stock or something like that I don't have anything physical. and then you get that return. So it's kind of like a dividend, but it's guaranteed, and usually they're around 6%. So what I've been asked was, hey, would you want to do a REIT that I could invest some of my money into you and buy something like that? So we were looking at buying an 8-plex just recently. The numbers weren't quite there, but if we were borrowing people's money and only paying that 6% return, it would make sense. And so I kind of looked into doing something like that. I don't know that I'm ready to do anything like that right now. Maybe in the spring or the summer, I would look into something like that and look at having investors come in with a couple $100,000 and investing into a project with me. I would hire a manager, and I would just make sure that it's run and taken care of, and you would get your 6% or 8% or whatever we would go off of. So there's many companies out there that do different types of REITs that are doing large complexes in all over the country and in different countries as well. And you can invest in those. Like I said, they guarantee usually between 6 and 8%. They have a property manager that manages it, keeps it rented, keeps it full, and you get that percentage as well as small write-offs for any repairs or anything like that goes through each year. So one thing I want to say about renting real estate or real estate investments, one, you do have to manage the property. If you don't manage the property directly and you hire a property manager, you're going to give them 8 to 10% right off the top. So if you're making $1,000, you're going to be paying them $100 a month to manage your property, find tenants, do upkeep, stuff like that. Now, the other thing is, if you aren't going to manage it and somebody else is managing it, that means you aren't going to be doing the repairs either. So what I've noticed in doing my own property management is that if something breaks and I don't repair it, if I hire somebody out, like a hole in the wall, say it's that size, you have to repair that. That's going to cost me like $20 to fix. If I hire a repairman, it's going to cost me $150 to pay them to fix it. If a water heater goes out, a brand new water heater costs $400 or $500. That's what it used to cost. Now they're $600-700. But it's going to cost you another $300 or $400 worth of just labor to get that installed. So if you're going to do that, that's going to cut into that 1% as well. So if you're making $1,000 a month and you're paying a property manager, you're hiring out all the repairs, things like that, you're paying someone to clean it when they move out, you're looking at losing another half to, another 10%. So that's another $100 a month. So out of that $1,000 you're looking at making, you're only going to end up making $800. So just keep that in mind, and that's okay as long as you're making that 10 or that 1% monthly. The fees and stuff like that are okay. That's okay as long as you're still in the black and you're not in the red at the end of the month. So just keep that in mind when you're buying real estate. If you get into a REIT, you don't have to worry about any of that. The property manager takes care of all that, and you're still getting your 6%. So if you look at it that way, 6% not doing as much, not really doing any work, versus maybe making, 9%, but you have all this headache as well. So that's why people get into these REIT investments versus their own personal real estate and managing it themselves. So REITs are good investments. A lot of people get into those to own a little bit of real estate and to be able to make that return annually. And then you can pull out of that whenever you want. When they sell the property, you get to get a portion of that sales appreciation, which is great as well. So not only does it go up in value appreciated wise, but then you also get that annual percentage, which is usually 6%. So it'd be $6,000 every year if you put in $100,000. So that's one thing to look at. If that's something that you want to do, I can give you some links down below to help you get involved with that. And again, I may be looking at doing something like that this spring or summer. So hit me up in the comments down below if you want to get involved in something like that. Now, the other type of real estate you have right now, you could be buying land. If you're buying land in town, know that I'm going to say right now it's going to be a liability. It's not going to be an asset, only unless you're going to rent that land out for somebody to use, because you're going to be paying property taxes on that. It does appreciate in value slowly. Raw land doesn't appreciate in value very quickly like real estate does. So just be aware of that. And usually if you're not going to build or do something with it, it just sits there and it doesn't benefit you at all. So I would stay a little bit. I've never bought land myself. I've looked at buying some land in the past to build on, and I've walked away from it. I would say that buying something that's going to pay you a return quickly, instantly, is where I always like to stay. So if you like these types of videos, these business related, stock market, investment types of videos, click the like button down below, subscribe to my channel. I try to post once a week, if not twice, when I'm not busy. So if you have any questions, again, leave that comment down below. I'd love to hear from you and get back to you with any comments that I have as well. This is Building a Million, one day at a time. Catch you next time.